For 50 years, the world has operated on a single, unshakable belief. The belief that a piece of paper printed by the United States government is the ultimate store of value. We call it the dollar. It prices our oil. It settles our trade. It anchors the savings of nations. But trust is a fragile thing. On February 26, 2022, that trust was broken. When the United States and its allies froze $300 billion of Russian central bank reserves, a shockwave went through the global financial system. It wasn't about whether you supported Russia or not. It was about the realization that if your money is held in dollars, it isn't really yours. It belongs to the United States, and they can turn it off with the flick of a switch. In the capitals of the global south, from Beijing to Brasilia, from Riyadh to Mumbai, a new strategy was born. They realized they needed an asset that no one could freeze, an asset that no one could print, an asset that had no counterparty risk. They turned to gold. But this isn't just about buying metal. This is about building a new operating system for the world economy. China is currently executing a strategy known as the sovereign pivot. They are building a gold corridor to allow nations to trade without touching the dollar. They are launching digital payment rails like Mbridge to bypass Western banks. And they are preparing for a world where money is once again backed by something real. Welcome to The Financial Coin Historian. Today we are going to deconstruct the architecture of the post-dollar world. We will expose the hidden gold reserves of the People's Bank of China. We will analyze the BRICS Unit proposal. And we will ask the ultimate question. Is the era of the US dollar ending? And is the era of gold returning? To understand the future, we must understand the trauma of the recent past. The global financial system is built on the idea of sovereign immunity, the concept that a central bank's money is sacrosanct. When the G7 nations froze Russia's reserves, they weaponized the financial system. For China, this was a Suez moment. It was a signal that their $3 trillion in foreign reserves were not a safety net, but a hostage, the Arslan Alp 14. Economists have identified a group of central banks, sometimes called the Arslan Alp 14, that have actively begun diversifying away from the dollar since that moment. These include China, India, Turkey, and others. The data from 2024 and 2025 confirms this trend. According to the World Gold Council, central banks have been buying gold at the fastest pace in 50 years, over 1,000 tons annually. Why gold? Because gold is the only settlement-neutral asset. If you hold U.S. Treasury bonds, you're dependent on the U.S. government paying you back. If you hold gold in your own vault, you are dependent on no one. China realized that to be truly sovereign, it had to minimize its exposure to the U.S. financial system. This is not just diversification. This is a defensive wall against future sanctions. But hoarding gold is not enough. You have to be able to use it. For decades, the price of gold was set in London and New York. The West controlled the market. China is changing that. Enter the Shanghai Gold Exchange, SGE. Established in 2002, the SGE has quietly become the world's largest physical gold exchange. In 2023 alone, it handled 54,000 tons of physical gold. That is 75% of the total global volume. The International Board. In 2025, China launched a strategic initiative through the SGE's International Board. The goal? To allow foreign countries to store their gold in Shanghai rather than in London or New York. Think about the psychological shift. For a century, the Bank of England was the safekeeper of the world's gold. Now, China is offering a geopolitical sanctuary. They're saying to the world, bring your gold here. We won't freeze it. We won't sanction you. They even opened a certified vault in Hong Kong to facilitate this. This allows nations to trade gold using the offshore yuan, creating a direct link between Chinese currency and physical metal. This is the foundation of the gold corridor. Now, let's look at the numbers. Officially, the People's Bank of China holds about 2,264 tons of gold. That sounds like a lot, but it is only about 4% of their total reserves. However, most analysts believe this number is a fiction. China is the world's largest gold producer, mining approximately 370 tons every year. China is also the world's largest gold importer. And yet, very little of this gold ever leaves the country. It is a circular gold economy, the army ant strategy. Experts estimate that China's true sovereign holdings are likely between 2,500 and 5,000 tons, perhaps even higher. They use a strategy of hiding these purchases in other state entities, sovereign wealth funds, state-owned banks, and military accounts, so they don't spook the market. Why hide it? Because if the world knew how much gold China really had, the price would skyrocket before they finished buying. They are accumulating a war chest, a monetary nuclear option, to be revealed only when they are ready to float a gold-backed currency. What do you do with all this gold? You build a new currency. For years, the BRICS nations, Brazil, Russia, India, China, South Africa, and their new members, have complained about the dollar. Now, they are proposing a solution. It is called the unit. This is not a currency you will use to buy coffee. It is a trade settlement instrument. The proposal is revolutionary, a currency backed 40% by physical gold and 60% by a basket of BRICS national currencies. The fractal node model. The design is decentralized. Instead of one central bank controlling it, each participating nation would act as a node, holding the gold reserves locally. This prevents any single country from dominating the system. The unit solves the trust problem. Nations don't trust the UN completely, and they don't trust the ruble, but they trust gold. By anchoring the currency to gold, China creates a tangible confidence that fiat currencies lack. If this system goes live, it creates a way for countries to trade oil, wheat, and technology without ever touching a US dollar. It breaks the monopoly of the petrodollar. A new currency needs a new way to move. You cannot run a post-dollar system on American rails. This brings us to the technological pillar of the strategy, Project Mbridge. Developed by the Bank for International Settlements Innovation Hub in Hong Kong, Mbridge is a platform for multi-central bank digital currencies. Currently, if you want to send money from Thailand to the UAE, it often has to go through a US bank in New York via the SWIFT system. It takes days and costs money. With Mbridge, the central banks connect directly. The transaction happens in seconds. It is peer-to-peer. China's cross-border interbank payment system, CIPS, is integrating with this. In 2024, CIPS processed over 175 trillion yuan in transactions. This is the plumbing of the new order. If SWIFT is the weapon the US uses to sanction countries, Mbridge is the shield that renders that weapon useless. While China builds the infrastructure, the global banking rules have quietly shifted in their favor. We have discussed the Basel rules in previous videos. In 2019, under Basel III, a massive change occurred. Gold was reclassified as a Tier 1 asset. Previously, gold was considered a risky asset, Tier 3. Banks had to hold cash reserves against it. Now, gold is considered cash equivalent. It is risk-free. This allows banks to hold physical gold to meet their capital requirements. It incentivizes the accumulation of bullion by the banking sector. This was a green light from the global regulators. It signaled that gold is no longer just a barbarous relic. It is money again. Why is all of this happening now? Because the alternative, the US debt system, is reaching a mathematical limit. The US national debt has passed $36 trillion. Interest payments are exponential. History teaches us that when a hegemon gets into this level of debt, they have two choices: default or inflate. The world knows the US will choose inflation. They will print the dollars to pay the debt. This guarantees that the value of the dollar must fall. The gold revaluation scenario. There's a theory, discussed in deep economic circles, of a global reset via gold revaluation. The US Treasury holds 8,000 tons of gold. Currently, it is valued on their books at a statutory rate of $42.22 per ounce. If the price of gold were revalued to, say, $15,000 or $20,000 per ounce, it would balance the balance sheets of central banks globally. It would wipe out the debt ratios overnight. China is preparing for this. By hoarding gold now, they ensure that when the reset happens, when the price of gold is set to match the supply of paper money, they will be on the winning side of the transfer. Is the dollar dead tomorrow? No. There are massive challenges. The trilemma of international finance means China cannot simply replace the dollar without opening its capital markets, which it refuses to do. The yuan is not fully convertible. You cannot easily take money out of China. This is why the gold corridor is so important. China does not want the yuan to be the global reserve currency in the same way the dollar is. They don't want to run the trade deficits required to supply the world with liquidity, the Triffin paradox. Instead, they want a bipolar monetary reality. One sphere uses the dollar, the other sphere uses gold and the yuan. They are building a trade currency, not a reserve currency. They want to buy oil and sell goods without American interference. The story of money is a story of trust. For 50 years, we trusted the US government. Now, that trust is eroding. China is not replacing the US dollar with the yuan. They are replacing the US dollar with gold, using the yuan as the mechanism to move it. They are returning to the oldest rule of finance. He who has the gold makes the rules. We are witnessing the sovereign pivot, a shift from debt-based trust to collateral-based trust. From the digital ledger of the Fed to the physical vaults of Shanghai, the dollar will remain powerful, but it will no longer be alone. The monopoly is over. And for you, the individual, the lesson is clear. If central banks are dumping paper to buy real assets, maybe you should pay attention to what they do, not what they say. This is the Financial Coin Historian. The architecture of money is changing. Are you ready for the new order?